And good afternoon. Welcome into another episode of Market Talk on this Tuesday, March 8th. Thank you so much for joining us and making us part of your day once again. I'm your host, Jesse Allen. Thanks for being here. Find us online, markettalkag.com. That is our home on the web, markettalkag.com. Find all of our social media links there. Stay up to date with all the latest breaking news of agriculture. You can find all the latest news stories on our website as well. Of course, market info and much more. Listen back to past episodes of the show and listen to current episodes by all of our streaming sources or via the video on YouTube as well. Well, we got plenty to discuss today. A lot of headlines out in the market trade, a lot of volatility seen in the markets, especially that wheat market again. Let's talk about all of it. Let's bring in our good buddy Jim McCormick with agmarket.net joining us this afternoon. Jim, great to have you on. Another wild day. It's almost like the Wild West of ag marketing is going on here right in front of our eyes the last few days, Jim.
Would 100% agree. I mean, I've been doing this for 25 years now, Jesse, and the moves we're seeing right now, I think, are pretty much could be, in my opinion, unprecedented. The volatility is so extreme. It is very treacherous trading at the moment. I mean, a position can look very good, and 1 minute later, you could be out a lot of money. It's just absolutely amazing how fast everything's moving at the moment.
Very, very true. Well, I want to talk about quite a few topics. I think one of the maybe the big headlines of the day, of course, is President Biden announcing a ban on Russian oil, natural gas, and coal. I know the UK came out and said they plan to be off Russian oil by 2022. And I mean, we look at this crude oil market surging again. Gas in the U.S. is up over $4 a gallon national average, and I know necessarily in the grand scheme of things, talking core beans and wheat, it ties in. Um, what are your thoughts with this soaring energy market, the news today, and how that's all going to play in to our ag markets here in the short term and maybe the long term as well?
Well, I think in the short run, it's going to be more expensive. It's going to be more expensive to plant the crop, harvest the crop. The expense is going to be there if you're a livestock producer, especially on the beef side of the equation. I mean, when it gets to cost more, Jesse, to fill up your vehicle, you pretty much going to have to make some choices. So maybe they don't buy the steak; they go back to lower end cuts. So you're going to see maybe a little weakening of demand, which is kind of disappointing, to be quite honest, because I've been very bullish on kind of the steak kind of demand front as COVID's kind of wound down. We haven't talked about COVID at the last couple of weeks because it's been to the back burner, but partly because it looks like we're past the worst of it. And I think the country was set to really kind of open up its doors and go out. And I think a lot of people are still going to do it, but maybe instead of driving to Florida, they'll just drive within 100, 150 miles to try to save some money. So I think that's going to put a little bit of a damper on it. Now, the real question you're going to get is, the good news is I do think there's some opportunity to ramp up production for U.S. energy relatively quick. The reality is, if you look at the amount of oil rigs we're pumping right now, we are still not pumping as much oil as we were pre-pandemic. So, and if you look at the amount of licenses that actually been passed out last year, they were over 2,500. So the oil companies do have the initiative to drill, I believe, or they not necessarily the initiative, excuse me, they know where the oil is potentially. They're just choosing not to do it. And I think that's just unfortunate. It's an economic incentive. The reality is labor forces are very, very tight around the country right now. If you look at the state of North Dakota, which has become a big oil producer recently, their unemployment is like 3%. But you take that down to people, that's less than 13,000 people unemployed. So even if you had an oil rigger right now, a company says, hey, I want to start pumping oil in North Dakota today, who's he going to hire? So that, I think, is part of the problem we're seeing right now with these oil companies is they found it cheaper to import, foreign oil as opposed to hire American workers because of the tight oil situation or the tight worker force situation. But with the prices where they're at, my guess is you are going to start seeing some of that supply come online, which would be very good for America to pump more American oil. And that will bring down the price of energy. But it's going to take some time, and there is going to be some pain at the pump at this point in time.
Well, obviously, plenty of volatility there tied in with the Russia-Ukraine situation. We're also seeing that volatility in the wheat markets. I mean, just a massive range today as we segue over into the grains, Jim. I mean, at one point we were limit down the $1.30 limit in Chicago KC, and then we ended up well off that. I mean, we were down 7.5 in May Chicago wheat at the close. It's just Talk about this volatility that you're seeing in this wheat market, and just, I guess the fact that we actually traded today was probably something that a lot of folks wanted to see.
Well, exactly. And probably what happened, folks, is we had a squeeze, Jesse, in the wheat market last week. And there was something that was kind of really interesting. When the market is limit up, they trade what's called the synthetics. That's the options. What was interesting last week when the wheat market was locked limit, I believe on Thursday, to get out of that option synthetically, you could have paid $14 buying the way deep in the money $4 wheat call, essentially equivalent to $14, and got out of the wheat. Now, what was interesting coming out of the weekend on Friday, or Monday, even though we're a limit up, we still were synthetically trading lower than we were last week at 14. And then yesterday, if you look where the synthetics were, it would suggest that once we start trading, we would be able to start trading. And I think as soon as that happened, the bulls, which have been squeezing the heck out of the bears, just ran for cover today and crashed the market down hard. And then, of course, midday, we had a headline, folks, that said Putin has decided he is going to ban the exports of all commodities and raw materials out of Russia. That brought the wheat right back up, as Jesse pointed out. And we were a limit down, and all of a sudden we were back up 40, 50 cents, having a $2 trading range. And then we backed down late in the day because the reality is we're not really certain what this headline means. My guess is Putin is not going to sell certain products to certain countries. He may not sell his wheat to the Europeans. He will not sell products to countries like the United States, but my guess is he will be willing to sell wheat to the Chinese. He may not sell energy to the United States, but he will sell China energy. The one thing we need to be concerned about, though, Jesse, is the fertilizer aspect of it. Russia is the biggest exporter of fertilizer in the world. Belarus, which is pretty much under China's control, I believe, is number 5. Combined, those two countries make up about 17.5% of the world's exportable fertilizer. And that becomes a legit problem for the United States specifically, is will we have enough fertilizer to get our crop in the ground for not necessarily just the 22 crop, potentially the 23 crop. Now, I know Jesse and I were talking before that we started recording that a lot of producers out there are feeling comfortable that they have their needs covered. I do want to caution producers out there right now. This could change in a heartbeat. If you do not actually have that product on your farm right now, you got to be questionable. It has happened. We've had several customers who thought they had products purchased, and their supplier said, I'm sorry, we cannot get everything available, and they're short. So until you get it on your farm, do not be 100% confident you actually have that fertilizer purchased.
That's going to be a huge thing to watch, Jim. A massive thing to watch here as we are getting closer and closer to spring planting in most of the country here for 2022. Corn market today was relatively quiet. The row crops didn't really move a whole lot from where we opened. Beans were higher. We'll talk about that in a minute. But corn was relatively quiet, around unchanged today. What do you make of the corn market that, again, pretty much had the quietest day of the 3 grains?
I think the corn market right now is just, the wheat was reacting to the being majorly overbought, correct? And the corn market was more kind of a little bit of a follower of the wheat. The wheat was down, the beans are up, kind of caught in the middle. What we're looking at on the corn right now is we do have a USDA WASDE number out tomorrow. Historically, this number, Jesse, is not a big number. I mean, they tend to tweak the demand a little bit. We'll make a little bit of adjustments to the South America crop. But with the safrinha corn crop, the big crop getting produced out of Brazil, just getting planted, they tend not to make big adjustments. But what's going to change tomorrow that's going to probably add a lot of volatility we usually don't see is the Outlook board chairman came out today and said, hey, look, we are going to give our best guesstimate of how the situation in Ukraine could affect the world supply demand balance sheets. And the reality is right now is there's roughly somewhere between 500 and 600 million bushels of corn that has been sold by the Ukrainians that have not been able to be shipped out, folks. And that's the $1 million question is, can you get that crop shipped out? Now, what the USDA may do, we'll see, is let's say they cut that export and say, look, maybe only half of that's going to get shipped out. So what happens? Is the world not going to consume that 300 million bushels of corn, or is somebody else going to provide that? I don't even think somebody else is going to provide it, and that'll be the United States and maybe Argentina. And let's say they increase that demand by 300 million bushels on the export. That'll drop our carryout closer to 1.2, which really gets us very tight going into the acreage battle because there's just no room for error. And, that's just one thing they're going to look at. The other thing they're going to look at is the crop getting planted. Historically, the Ukrainians plant between 35, 40 million metric ton corn crop. What if they only get half of it out, guys? We don't know. I mean, they're in the middle of a war zone. Are they going to be able to get the seed? Are they going to be able to get the fertilizer? Are they going to be able to get the diesel to run the tractors? We just don't know. My personal opinion, I do not think they'll be able to get a full crop. I think if you look at where the people are, in World War II, farmers farmed. But if you look at how we farm nowadays, the farmers don't just farm for themselves and maybe their local, suppliers or their local, communities. They farm for the world. A lot of the stuff that gets exported out of the Ukraine goes to China. Now, let's face it, Jesse, China does not have the Ukrainians back right now. They are backing the Russians for all intents and purposes. They're not doing anything to slow down this. They just say it's a bad deal. So the situation, if you are a Ukrainian farmer right now, are you going to put all that money at risk if you can get the money to produce a crop for a country that doesn't have your back? Or are you just going to say, look, I'm going to produce enough to provide essentially food for my country? It's a question that no one has the answer to, but it's something that we need to watch, because if they do not produce it, it puts even that much more pressure on the United States to have a good crop in 2021 into 2022.
And you mentioned as well with China, they're buying a lot of corn from Ukraine. We're seeing China ramp up their purchases of soybeans and corn, buying cargoes from the U.S. And I think that's something that speaks to what you just said. We're going to be watching that situation very closely with those supply demand numbers on tomorrow's report. And if there are changes there on that front, I think as well on soybeans, strong day today, that South American situation. As you alluded to, I think we could maybe see some changes to those numbers tomorrow that could move the market one way or another. That seems to be the big underlying headline to me that's really driving the soybean market. Is a lot of folks, a lot of estimates are expecting another reduction in that soybean crop from South America tomorrow, Jim.
Yeah, I think the Brazilian crop right now is roughly, I believe, 134. I think Conab put it around 128, 129. We'll see. I mean, I think the average guess is right around 129, but you got some estimates down there in the low 120s at this point in time. It could be that low, Jesse. I doubt the USDA will go that low this time of year, especially with the chaos we're seeing in the markets right now. I don't think they need one more log to burn into the volatility fire, but I do think this crop is getting a little bit smaller, at this point in time. And that's adding a lot of what it angst to the Chinese. The Chinese were counting on a big South American crop. Now it's bringing the demand back to the United States. So the U.S. supply is getting tighter. And that's a situation potentially also we need to keep an eye on. Veg oil. Bean oil market is finding support because, when the trade is getting excited about what's going on in Ukraine, you're seeing a lot of speculators buy wheat and they buy corn because the headline CNBC was running charts of the wheat price and everything else. But what a lot of people don't realize is Ukraine is one of the biggest suppliers of sunflower oil in the world. So if they cannot get that sunflowers planted, that veg oil essentially, produced, it's going to increase the demand for U.S. veg oil as well. So that's something we need to keep an eye on as well. So the Chinese are looking at it right now going, the world already has a tight veg oil situation. It could get tighter. Now you got a South America bean crop getting even smaller. The world right now, unfortunately, has got a very tight food situation with an energy complex, and the world is starting to scramble. I believe it was the Iraqis came out the other day, said they set aside $100 million to replenish their wheat stocks. So the world is definitely worried about this food inflation problem we're having.
Very, very true. Well, Jim, you mentioned the acreage battle as well, and I think all of this is going to come back to all the factors that are out there, and it's really shaping up to make things interesting. I mean, there is still technically time to make changes to what you're planning on putting in the ground here come this spring. And what are you hearing from farmers right now? Is there still a lot of last minute changes? I know there's so many variables out there to it right now.
I mean, what we're hearing from us, we're thinking it's probably closer to maybe 90 to 91 million acres of corn, 80, 90, 90 million acres of beans. That's kind of what we're leaning at right now. But I do think it is in flex. When you look at what the wheat market did the last couple of weeks, we do have producers in the northern part of the country that looked at the price of spring wheat and said, maybe that is a product I'm going to plant this year. So I do think there is some acres that are flex. Not a lot, but let's just say even 5 million acres is a huge flex. When you try to figure out how tight the U.S. balance sheet is for the corn and beans already, you throw in this Ukraine mess of them potentially not being able to export corn or potentially, have a smaller wheat crop because they can't get the wheat out. The battle for acres, I think, will go right into the spring. And that also comes back to that fertilizer instance. Maybe you have some producers that had bought fertilizer with the anticipation of spring fertilizer applications, and all of a sudden they get that phone call from their supplier, force majeure, and says, "Hey, I'm sorry, I can't produce. I can't provide what I said I was going to provide." Does that make that producer recalculate his balance sheet? Because let's face it, the balance sheet right now, potential profitability looks a whole heck of a lot different than what it did just 5-10 days ago with what we've seen in the wheat market.
One other note in the grains I want to pick your brain on real quick, and I'm going to pull up the latest U.S. drought monitor on the video feed as well. But I think a lot of farmers I'm hearing as well, maybe you guys are too, going to various meetings here the last couple of weeks. Just the drought across the U.S. I mean, yeah, if we get the crop in the ground, we get our fertilizer and everything, and obviously we can't control the weather. But I know there's a lot of considerable worry about drought conditions across parts of the country right now, Jim.
There is, and I think there's rightfully so, Jesse. Several of the weather guys we talk to and deal with on a daily basis say some of the modeling, and it is modeling at this point, is suggesting a potential warmer, drier pattern for this summer, especially for the Western Corn Belt. When you look at that drought monitor right now, when you look at Kansas, Oklahoma, Nebraska, how dry they are, the crop ratings right now are some of the worst ratings we've ever seen for this time of year. If we do not get a trend change and start getting moisture into that wheat belt right now, it's not a matter of if, in my opinion, it's when the USDA is going to start lowering that wheat crop. So now you got a double whammy for the world potentially. You've got the U.S. wheat crop getting smaller. You've got a situation in Ukraine where they may not be able to export or get their wheat crop harvested. And then on top of that, the Chinese reporting earlier this week that their crop's off to a rough start because it was so wet this winter. So the Chinese are worried about their wheat crop. So this wheat market volatility we saw today, that may be the norm as opposed to the exception as we build our way into the summer if the weather does not cooperate and it is a hot, dry summer.
And one other area I want to point out on the drought monitor map too, ways off, could be a storyline, could not, but Iowa. I mean, look how abnormally dry the state of Iowa is still right now. So I think that's another thing to think about and watch closely as we head into spring and summer. Jim, I want to talk livestock a little bit. You alluded to this at the top of the show about beef demand and tied in with oil. You look at the cattle markets today, not bad day today. Feeder cattle did kind of fade, but cattle markets looking all right, and hogs were strong today. What are your thoughts on the livestock trade?
Well, after the hard break last week, they're trying to bounce back a little bit. Like I said, I think I'm a little bit worried about the beef right now because there's no doubt about that. Like I mentioned earlier, the consumer is definitely getting pinched. He's going to have to make some decisions. But, I think any kind of positive news potentially on this crisis in Ukraine would be positive because, like I said, I do think the U.S. is definitely past COVID, and I think that's a good sign. As for the pork situation, I'm a little bit concerned about what's going on with this poultry bird flu running around the world, not around the world, excuse me, the United States. As that's going on, you're seeing a lot of countries shun U.S. poultry products, which will back it up into the U.S. Grocery system, which puts us a little bit more competition from a pork. And right now, the world is a little bit awash in pork. The Chinese, after their African swine flu, they expanded at just massive rates to build back their hog herd. And now all of a sudden they've got an oversupply, and there's a little bit of oversupply in the world with this bird flu essentially compounding the supply situation in the United States. That could be a little bit of a drag on the hogs near term.
Well, Jim, a lot of stuff we covered today. Before we run out of time, final thoughts, floor is yours. Anything you want to mention or reiterate today?
Well, I'm going to just reiterate right now a couple things. If you are a trader, my advice to you is go to smaller sizes. The volatility is extreme right now, and like I said, what looked profitable. I mean, there's some wheat traders that just got whipsawed by a $2 move up and down today. If you are a producer, do not be afraid to start layering in protection. Our group is encouraging puts. They are expensive, but you are locking in some phenomenal prices. Look what the wheat market did. History says this will not last. It's not if the market at top, it is when it's going to top. And usually you cannot see it till after the fact. The profit margins are there. Do not be afraid to start locking them in. Do you want to keep that upside open? Yeah. So if you go to the cash, consider buying calls. If you don't want to go to the cash, buy puts, but do start laying off at least some of the risk just to be the smart businessman.
Well, Jim, if producers need some advice on managing their risk and looking at their marketing plan, I know they could reach out to you and the team there at agmarket.net. What's the best way to do that?
I think the best way to do it is actually just go to our website, agmarket.net. You can sign up for our research. If you are going to be down at the Commodity Classic, please come down and see us. We're going to be down there. We're actually got a raffle to give away a shotgun and a bison cooler. So please come down and meet the guys at the booth and enter for a chance for a shotgun.
Well, Jim, appreciate the time. I know it's been a busy day. Thanks for joining us today, sir, and we'll talk to you again real soon.
Thank you for having me.
Jim McCormick with agmarket.net, our guest today here on Market Talk. That's going to do it for the show on this Tuesday, March 8th. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.